is specifically recorded for TYBcom students who are in semester 5, subject direct tax, chapter income from house property, and we are going to solve Mumbai University solution or Mumbai University question of April 2016. Let us try to understand the question. Mr. Bipin Deshmane gives the following information for the year ended 31st March 2016. Particular: house 1, house 2. Status of house 1 is self-occupied and of house 2 is resident let-out property. Fair rent of house 1 is 3,60,000, house 2 5,20,000. Rent received house 1 nil, house 2 6 lakh rupees. Municipal tax paid by him for earlier years 30,000 for house 1 and 30,000 for house 2. For current year 30,000 for house 1 and 30,000 for house 2. Interest on housing loan for construction of house taken in 2011-12 paid during the year 50,000 for house 1 and 2 lakh for house 2. Due but not paid 30,000 for house 1 and 20,000 for house 2. Repayment of principal amount of housing loan taken from Saraswat Cooperative Bank 1 lakh for house 1 and 60,000 for house 2. Right? So we can say like this many items will go under the head income from house property. Correct? And repayment of principal amount of housing loan, you can claim deduction under section 80C. Fine. Now the next is interest on fixed deposit with Union Bank 4 lakh rupees. Dividend from Tata Sons Limited on preference share 50,000. Dividend from Saraswat Cooperative Bank Limited 20,000. Now these items will go under the head income from other sources. He paid medical premium of rupees 15,000 on his health and rupees 20,000 on the health of his father, who completed 65 years on 31st March 2016 by check. So he paid medical premium of 15,000 for himself and 20,000 for his father, who is senior citizen. So this he can claim under section 80 subsection D. Fine. Compute his taxable income for assessment year 2016-17. So let us start. A. Income from house property. Now there are lot of items under the head income from house property. So let us calculate the total income from house property in the working note. So we will go to working note 1. So the first item that is given in the house property is fair rent 3,60,000 and 5,20,000. Fair rent in case of house property it will be nil. And in case of house property 2 it will be 5,20,000. House property 1 is self-occupied, hence it is nil, and for let-out property it is 5,20,000. Then municipal valuation, the no information regarding municipal valuation is given in the question, so we will say nil in both the cases. Now you will have to take whichever is higher. So in case of self-occupied property, nil, and in case of landlord property, 5,20,000. Now we will take actual rent received. Let's see what the amount of actual rent received. House 1 nil, house 2 6 lakh rupees. House 1 we will write nil, and house 2 we will say 6 lakh rupees. Now again you will have to take the higher. So you will get gross annual value. You will have to take the higher. So in case of house property 1, it will be nil, and in case of house property 2, it will be 6 lakh. So this is your gross annual value. From this you will have to subtract less municipal tax paid let's see municipal tax paid by him for the earlier year is 30,000 for house 1 and 30,000 for house 2. Okay, now one thing which is important, in case of house 1 you won't be getting, you cannot deduct municipal tax, so you will have to write nil, wherein you will have to consider the municipal tax for house number 2. Now there are two amounts, one paid for the earlier year and second one is paid for the current year, so we will have to take both. So we will say for house 1 it will be nil, wherein for house 2 it will be 60,000, 30,000 of earlier year and 30,000 of current year. So once you subtract this municipal valuation from gross annual value, you will get net annual value. So in case of house property 1 it will be nil, in case of house property 2 it will be 5,40,000. Now from this you will have to subtract deduction under section 24. In this A, standard deduction under section 24 subsection A at the rate of 30% on net annual value. So in case of house property 1 it will be nil, wherein in case of house property 2 we need to calculate. So let us calculate. 5,40,000 into 30%, 1,60,000. So let us record 1,62,000. Then B, interest on loan under section 24 subsection B. Now let's see. Interest on housing loan for construction of house paid during the year is 50,000 and due but not paid is 30,000. So we will have to take both. So it will be 80,000 for house 1 and 2,20,000 for house 2. So let us go and record. $80,000 in case of house 1 and 2,20,000 in case of house 2. Now if you subtract, you will get minus 80,000 in case of house 1 and for house 2 let us calculate 5,40,000 minus 1,62,000 minus 2,20,000, 1,58,000. So let us record here 1,58,000. Fine. So this are the total income of house 1 and house 2. So from house 1 we have loss of 80,000 and from house 2 we have income of 1,58,000. So let us calculate income from house property, that is house property 2 minus house property 1, because house property 1 is negative. So let us calculate that as well. 1,58,000 minus 80,000, that will give you 78,000. So we will write 78,000 over here, and this we will circle it as this is important for us, 78,000. So 78,000 is income from house property. So let us go and record in the solution. Income from house property is 78,000. B, income from other sources. Again we will go for working note 2 because there are more than one items under the head income from other sources. So let us see the question first. Interest on fixed deposit with Union Bank is 4 lakh. So interest on fixed deposit with Union Bank is 4 lakh is fully taxable under the head income from other sources. So let us record here. interest, let us give the number as 1. Interest on fixed deposit with Union Bank, that is 4 lakh rupees, which is fully taxable. Second is dividend from Tata Sons Limited on preference shares 50,000. Now any dividend which we receive from Indian company is fully exempt. So let us exempt this. Dividend from Tata Sons Limited on preference share, this is fully exempt. So we will take this in the inner column, 50,000 less exempt under section 10 subsection 34. $50,000 so outer column it will be nil. Third, dividend from Saraswat Cooperative Bank Limited 20,000. So again this is a company, Saraswat Cooperative Bank Limited. So again if you are receiving dividend from a company, it will be fully exempt, and that to Indian company. So let us record dividend from Saraswat Cooperative Bank Ltd $20,000 less exempt under section 10 subsection 34. Again this is fully exempt. So outer column it will be nil. Now let us calculate the total income from other sources. So income from other sources will be rupees 4 lakh. Again this thing is important for us, this 4 lakh rupees. This is income from other sources. So let us go and record in the solution. Income from other sources as 4 lakh Now we will have to find out the gross total income. You will have to take the total of both. So let us take the total. So you will get gross total income, which will be income from house property plus income from other sources. So it is 4,78,000. From this we will subtract deduction under chapter 6A. And this first will be investment or deposit under section 80C. Fine. This A will be, if you see the question 80C, we have only one 80C, that is repayment of principal amount of housing loan. So let us record that in solution. Repayment of principal amount of housing loan and this house property 1. House property 1 is 1 lakh and house property 2 is 60,000. So we'll record here house property 1 is 1 lakh and house property 2 is 60,000. So now let us take the total of this, both the thing. So the total will be 1,60,000. So the total loan which you have paid towards your housing loan is 1,60,000. Now the maximum amount of loan that you can claim is only 1,50,000 under section 80C as per Income Tax Act 1961. So we will say restricted to 1,50,000. Now we will go for the second one. Second. Now let's see what is next. Mediclaim premium, ATD. So let us go and record Mediclaim premium. Mediclaim under section ATD. And this A for self, that is 15,000, and B for father who is a senior citizen, that is 20,000. So total deduction that you can claim under section 80D is 35,000. Now if you take the total deduction, total of deduction under chapter 6A, it will be 1,85,000. Fine. Now if you subtract deduction under chapter 6A from gross total income, you will get net taxable income. So let us find out the net taxable income. $4,78,000 minus 1,85,000, 2,93,000. So 2,93,000 is the net taxable income. So this is our final solution. Okay, so if you are able to solve this question correctly, then you will score 15 marks, that is 15 out of 15. Thank you for watching this video.